You are listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday, the 14th of May, 2018. The books are in, and we sent out the first set of orders today. So those of you who pre-ordered your books, they're on the way. We have plenty in stock now. If you want the book, Charting Your Way to Wealth, please order it now. You can find the links at the Daily Market Review. If you receive our emails every day, the links are in there. You can go to the website chartingwealth.com and find the links under the Daily Market Reviews that we post every day. Plus, at our YouTube channel, the links are there also. Go buy your copy, $34.99. It is what you need to get started to understand what it is we go through and teach here every day. Both of our charting methods are covered in depth in the book, and we go through all the things that we use on a daily basis, how to understand our thought process, and again, how to start developing your own trading techniques. So please order a copy, support us here. We've been putting out our material for free for years now to you, and this is only the second thing we've ever put out that actually is something that brings in money to help fund our daily market reviews, our comprehensive review and forecast, and all the work we do for free for you here at chartingwealth.com. The other is, of course, our Trader's Journal, which is a compilation of our daily market, weekly market, and trade worksheets. Let's jump into these charts. We see the S&P 500 up 0.22%, the Qs down 0.11%, TLT 20-year bonds up 0.25%, and gold down 0.14%. That is for the day on Friday. What do we see as far as the weekly candle that's completed drawing on the S&P 500? It is a green open box candle. That typically means pretty strong up movement. Derivative oscillator continuing to lose downward momentum. Price percent oscillator is kinked up, heading toward what looks to be a crossing. Has not happened yet. Of course, we don't call it till it happens. That's following 2 weeks of sideways slide tending down with a doji and then a spinning top after a prior green up week back on the 20th. Now remember, all this down movement initially started with the big drop, as we call it, back on the week ending the 9th of February. The market then tracked down, well, sideways and up a little bit, then dropped off for 3 solid weeks and has really been sliding down sideways rather. Since then, trying to get going up back on the week ending the 20th of April, but then sideways and down over the next 2 weeks, the week ending the 27th of April and the 4th of May. But this last week has been an up week for the market. Let's look a little deeper and see what we see in the 2-day chart. Remember, it crossed over going up back on the 16th of April, went up for another 2 days, then slid down for several 2-day candles ending on the 4th of May, and then started moving up over the last, well, this is actually 5 days. We have 2 2-day candles and one half 2-day candle, which is, of course, a day candle. That's the latest one on Friday. It'll complete on Monday. But again, it's a nice, strong up candle. Price movement well above the 2-day trend line. So again, our weekly still hasn't crossed over, so we don't have a trade when it comes to the S&P 500. Both the 2-day and the weekly have to be moving in the same direction. We may have that happen over the course of the next week if the market keeps moving up. But what's interesting to look at, the market sort of peaked out, well, I mean, not peaked out, but it's hitting about the same place over 3 4-hour candles. So we'll keep our eye on things. Ended the day down a little bit, a red open box candle. Not a strong red down candle on the 4-hour chart, but an open box, but a bit of a pullback. So we'll just watch and see how things start. The price percent oscillator still heading up. Derivative oscillator is flat. So just keep your eye on things. The market's always subject to change. Remember, we are trend followers. We are not forecasters. So what's going on the S&P 500? Well, we are waiting to see if there's going to be enough pull up in the market to cross over going up our weekly price percent oscillator. If that happens, then we may have some trades. Don't right now. How did the market end on the day on Friday? 0.09%. It was an up week overall. The Q's up quite nicely. The biggest candle we have seen in quite a while, since maybe all the way back on the 16th of May. And that was after a big run up ending pretty much around the week ending the 2nd of February. Then things dropped off and then tried to run up again. And then, of course, we had a drop in the Qs, a 3-week drop starting the week ending the 23rd of March. And what we're seeing happen at this point is, again, an attempt to sort of recover and move up. Don't have a crossover going up yet. Derivative oscillator losing downward momentum. Price percent oscillator is headed up. What do we see on the 2-day chart? Well, it did cross over going up back on the 2nd of May. And we have basically 4, well, again, it's a half candle, but we have 4 candles moving up, representing 7 days of up movement. Derivative oscillator gaining upward momentum, price percent oscillator gaining up. So we'll see if things continue to move up and if it will be enough to pull the weekly price percent oscillator over, give us a weekly vertical crossover going up. Haven't seen that yet. And again, sort of the same topping action we're seeing on the Qs. Maybe that's just the way the week ended up, but price percent oscillators getting flat, derivative oscillators losing momentum. So keep your eye on things. The market may adjust a little bit. Things are always subject to change. We'll be standing by waiting to see what happens. Okay, going from stocks to bonds, what do we see going on TLT, the 20-year bond? Well, trying to bounce off the red signal line. Did not end the week crossing over. Sure as heck tried, but it did not happen. Remember, this is like the 3rd week now. What we saw happen at the end of the week on Friday, a push up 0.25% for the day. We have a red spinning top, a long wick on the bottom, little bit of a wick there on the top, but again, indecision tending down. Derivative oscillators continuing to lose upward momentum. Price percent oscillator, however, is ticked and moving up. What's going on the 2-day chart? It's trying to cross over going up. Now, if indeed that occurs, friends, what does that mean? Well, that candle will finish drawing on Monday. If that happens, that means that TLT will be moving in the same direction as the weekly chart, which can open up over the course of the week a potential for jumping into an up move. Price percent oscillator's already flipped over. And again, we can't really call that because the candle's not finished drawing yet. Remember, it's a 2-day candle. Friday's only the first day of the latest 2-day candle. As we look at the 4-hour chart, we can see where it bounced off the red signal line and is moving up. Ended the day a little bit down, a little flattening there, hitting about the same spot on our Heikin-Ashi candlesticks in the morning and the afternoon. So we'll keep our eye on things. Derivative oscillator gaining upward momentum, price percent oscillator headed up. So keep your eye on the prize. We may have an opportunity to trade up in bonds over the course of the next week in a good practice trade. That's where we are on TLT. Lastly, we go to gold, down 0.14% for the day. Nonetheless, the week ended with a green, solid green up candle. Again, not a strong open box green up candle. Again, price movement is still below the weekly trend line. Price percent oscillator still headed down. Derivative oscillator gaining downward momentum. What do we see on the 2-day chart? We see it flat, maybe moving up just a little bit on the price percent oscillator. Derivative oscillator losing downward momentum. We're going into our 3rd day of up movement, just touching on the weekly trend line. Of course, we broke the down 2-day trend line several days ago. We'll continue to watch and see what we see. Of course, what have we been waiting for in gold since we have both the 2-day and the weekly and down moves? We've been waiting to see if gold is going to cross over going down on that 4-hour chart, giving us an inverse play in gold. Well, the derivative oscillators finally started to lose some momentum. Price percent oscillator still headed up. We look at the Heikin-Ashi candlesticks. We have a doji at the end of the day, which means indecision tending down. We will see. We got excited when the market closed back on Wednesday with a down candle, hoping it was going to go down and give us a crossover going down on the 4-hour chart so we could hop into an inverse play. Maybe that will happen at the beginning of the week or throughout the course of the week early on. We shall, again, keep our powder dry and watch for that. Mark that on your weekly market worksheet to watch for a potential down play in gold if indeed that 4-hour chart pulls back and rotates over going down just like the weekly and the 2-day. Friends, that's where we are as we end the week, as we go into this next week, beginning Monday, the 14th of April. Again, if you've not ordered the book that we have put out, Charting Your Way to Wealth, I'm autographing all of them for you, $34.99, available at our website. Also, those of you who are subscribers, it is for free. And again, if you're not a subscriber, you need to be one, because everything that we do is first announced to our subscribers. All the latest training, any discounts we offer, all that goes out in our daily market reviews and our once-a-week comprehensive review and forecast that's emailed to you. You can also find links to order our book at our Charting Wealth YouTube channel. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.